Right, hi everyone. Welcome to the live analysis session brought to you by IC Markets. Right, before we begin today's webinar, please take note of the disclaimer. Right, this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. So take note of the risk warning that comes with trading margin forex and CFDs as they carry a high level of risk to your capital and you should only trade with money you can afford to lose. My name is Ketan Rameshchandra. This webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive into the charts and trading view, let's take a look at what's coming up on the calendar for this week, right? On the economic calendar for this week. There's got a few things going on, right? We've got a central bank announcement by the RBNZ, right? That's coming out of New Zealand. That's on Wednesday, 9th of April. We also have the Federal Reserve releasing its latest minutes from the FOMC meeting that took place in March. And of course, we've got inflation data out of the US, consumer inflation data, and producer prices coming out on Thursday and Friday, 10th and 11th of April. Now, this is the calendar for this week. Take note, the time here is displayed on GMT time. Right, there's nothing really on the calendar on Monday, 7th of April. There's nothing to take note of today. Right, headlines are likely to be dominated by the ongoing trade tariffs and retaliation between the US and its major trading partners. Now, coming to Wednesday, 9th of April, at 2 a.m. GMT time, the Reserve Bank of New Zealand is widely expected to reduce its official cash rate by 25 basis points to bring it down to 3.5%. Right, with the sluggish domestic economy in New Zealand, combined with inflationary pressures dissipating quite strongly, right, it's all but certain that the RBNZ will move ahead with a 25 basis point reduction. Given the current backdrop of ongoing global trade uncertainties, I wouldn't be surprised if the RBNZ moves ahead with a larger rate cut of 50 basis points on Wednesday. Nevertheless, there is definitely going to be a rate cut that's going to take place, and it's going to be interesting to see how the tone of the central bank has changed over the last from the previous meeting, given the current developments with global trade uncertainties over the last couple of weeks. And later on that day at 6 p.m. GMT time, the Federal Reserve will be releasing its minutes from the FOMC meeting that took place in March. Although typically the release of these minutes can have a pretty big impact on financial markets, but in as we've seen over the last couple of weeks, right, macroeconomic data has been overshadowed by the global tariff headlines. Nevertheless, it's still important to take note of these data releases that are being released that are going to be dropped this week, as they could impact markets in the near term. All right, and finally, Thursday and Friday, right at 12:30 p.m. GMT, we have first consumer prices for the US being released on Thursday, followed by producer prices on Friday. Right, should we see inflationary pressures continue to dissipate lower, right? As we can see, the forecast for headline CPI expected to moderate lower down to 2.6%, right? This could add further downward pressure on the dollar. Similarly for PPI as well, if PPI drops a little bit lower, right, we could see dollar come under pressure. But nevertheless, take note that most of the headlines, right, or most of the macroeconomic data for this week, right, could be overshadowed by the ongoing trade uncertainty that's taking place between the US and its major trading partners. All right, with that, now let's dive over to the charts on TradingView and begin the analysis on the dollar index, of course. Right, I'm on the daily time frame here, and we can see that the dollar index rebounded strongly last Friday. Right, this was primarily before that, just want to do a quick summary or review of the non-farm payrolls that was released by the Bureau of Labor Statistics last Friday, 4th of April. Right, we saw non-farm payrolls rebound strongly in March, with 228,000 jobs being added to the US economy, significantly higher than the forecast of 137,000. However, this was a somewhat mixed employment report, as we saw February's figures revised lower from 151,000 down to 117,000, while the unemployment rate also unexpectedly edged higher to 4.2%. And when we combine January's and February's revisions, right, we've seen a total of 48,000 jobs being revised lower over the last couple of months. So despite a strong headline figure of 228,000 jobs being added to the economy, this was somewhat a mixed report, as we saw the prior month's data revised lower, and at the same time we saw the unemployment rate edge higher in March. Now coming back to the charts on TradingView and looking at the dollar index, and we can see the dollar index rallied strongly last Friday, 4th of April, mostly due to the stronger than expected non-farm payroll. So if we look at um, the chart on the 30-minute time frame and we look at this vertical line here, oops, apologies, let me get this right. Yep, if you look at this, oh, hang on, there we go, right? If you look at this vertical line, right, this is at 12:30 p.m. GMT. That's when the non-farm payrolls was released, and we can see demand for the dollar pick up very noticeably, with the dollar index bouncing from 101.80 to as high as 103.26, right? So pretty strong rebound in the dollar index, right? Gaining about just over 1.3%, as stronger than expected non-farm payrolls triggered a strong demand for the dollar. However, we can see the dollar continues to remain under pressure, right? When we come back to the daily time frame, we can see that despite gapping higher at the open, right, we can see the dollar index closed at around 102.88 on Friday. It gapped higher to open slightly above 103, but it ran into resistance at pretty much the pivot and then reversed to drop sharply, dropping as low as 102.20 earlier today. Right, so you can see the pivot at 103.26 is identified as an overlap resistance. We can see that resistance has taken place here in mid-August of 2024. We can even see a nice double bottom take place here in at the end of October, early November of last year as well. And of course, another double bottom taking place much more recently on the 12th and 19th of March as well. So this creates a very nice overlap level. And we can also see, of course, resistance um, being met for the dollar index last Friday and today as well. So clearly, the overlap level at 103.26 is a significant barrier for the dollar index, and it has been identified as the pivot. Right, pivot is an overlap resistance that's accompanied by a Fibonacci retracement at 23.6%. We found this retracement by starting from this swing high here on the 13th of Jan, ending with the swing low of last Thursday. We can see that at 23.6% Fibonacci retracement aligns pretty well with the pivot. Higher up, there's a nice swing high resistance that was formed on 27th of March, right, as the dollar index was retracing higher in the third week of March. It stalled at 104.68 before reversing to drop sharply. So this swing high resistance is where the first resistance has been identified and is also accompanied by Fibonacci retracement at 38.2%. Now, looking slightly below, right, we can see the first support at 101.80 is now at an overlap level. Previously, this level functioned as a multi-swing high resistance back in September, and once price broke above it, what was previously a multi-swing high resistance could potentially function as support or pullback support, which is what has happened last Thursday and Friday. Right, of course, we can see Thursday's wick dropping as low as 101.26. Nevertheless, we can see the body of the daily candles close above this level, right, giving us some level of confidence that there is a pretty decent overlap support at 101.79. So that's how the first support for the dollar index has been identified. Right, so with overhead pressures remaining in place for the dollar, right, should and we've seen it reverse of this pivot earlier today, right, as markets reopened this morning, right, the dollar index gapped higher, climbed closely towards the pivot before stalling, and reversed sharply not only to close the gap but to drop as low as 102.20, right, despite retracing higher once again. Overhead pressures for this index remains, and we can expect it to probably slide lower over the next couple of days. Right, now let's take a look at dollar yen. Right, dollar yen has been under pressure as well, right, as global trade tariffs, as concerns surrounding global trade tariffs and wars escalated. right? Demand for safe haven currencies such as the Swiss franc and Japanese yen have surged very strongly, right? This, of course, is going to cause dollar yen to reverse and drop sharply, right? Any strong demand for the yen is going to cause this currency pair, the dollar yen, to reverse sharply. And we can see last Thursday, right, dollar yen tumbling as much as 2.73%. And when we look at it on a weekly basis, we can see that the dollar yen has dropped as much as 3.48% at its lowest point, and since the beginning of last Monday, it has dropped almost 2.5%, right? So you can see here this currency pair remains in a significant downtrend, as identified by the series of lower highs and lower lows, and of course, it continues to trade underneath the red Ichimoku cloud, which highlights the ongoing bearish momentum. In fact, there might even be a nice bearish channel that we can identify. Right, I believe there could be a pretty decent bearish channel to identify. There we go. It's a pretty good one here. Right, we can see dollar yen running the resistance at an overlap level. That's as well as the intersection between the overlap level and the upper trend line on the downward channel. And of course, we can see it bounce off the lower trend line on the downward channel several times at the end of Feb, in mid-March, and of course as recently as last Friday. So very clearly a very nice downward channel that continues to be respected. Right, so currently we are seeing dollar yen stabilizing at around 145, around a level of 145, and looks to be retracing higher. However, any retracement to the upside is likely to be met with resistance, right? So there's a nice, actually in the current context here, probably the pivot, I'd probably like to bring the pivot a little bit lower, right? We can see that there's a nice pullback resistance at 147.25, right? This level here previously functioned as a very significant swing low support in mid-March, but once it got taken out last Thursday, it then proceeded to function as resistance last Friday, so creating a very nice overlap level. In fact, the pivot at 147.25 is in fact an overlap resistance. Right, so that's why the pivot has been identified, and any retracement to the upside here is likely to cause dollar yen to stall and potentially reverse to drop lower. Now looking at all the Fibonacci retracements, right, we started retracement from this swing high on 28th of March, going down to the swing low of last Friday. We can see that the 38.2% Fibonacci retracement accompanies the pivot very well, right? The pivot is an overlap resistance accompanied by Fibonacci retracement at 38.2%. Higher up, there's another overlap resistance at 151.23. This level previously functioned as a nice swing low support back in the first week of Feb, functioning as support once more in mid-Feb, and then when the dollar yen broke lower in the third week of Feb, we can see the retracement to the upside here in the first week of March was met with resistance, and the second one as well at the end of March, running the resistance once again, right? So you can clearly see two multi-swing high resistances to form a very significant overlap level. So that's how the first resistance has been identified, is an overlap resistance. There may even be a Fibonacci retracement that we can use. Let's check it out. Let's try it out. Starting from this swing high on the 10th of Jan, going down to the swing low here on the 4th of April. Looking at all the fibs, could be a 50% retracement that sits close enough to the first resistance. So let's keep the 50% retracement on our analysis on the charts here. Right, there we go. And maybe I would like to run one more retracement, this time starting from this swing low on the 11th of March, going up to the swing high on the 28th. The purpose of running that retracement is to look for key extension levels, which sit at 127 and 161%. However, we can see that 161% sits pretty far from the first support. However, the extension at 127% seems to be an area where the dollar yen has stabilized or has found a temporary floor since last Thursday. So let's keep the extension at 127% on, and maybe just identify this as a downside confirmation level here. Right, so take note, dollar yen continues to remain in a prolonged downtrend, right, as evident in the downward channel, right? So any retracement to the upside towards the pivot at 147.25 could be met with resistance, identifying a potential bearish reversal for this currency pair, and it should slide lower towards the Fibonacci extension at 137%. However, if this level gives way, right, then we're likely to see further downside action for this currency pair. Hence, the extension at 127% has been identified as a downside confirmation level. And of course, the first support beyond the extension at 127% is at 142.17. This is a swing low support that was formed back in October of 2024, right? As dollar yen was retracing higher, by the end of September, it made a sharp pullback to stabilize at around 142 before staging a very strong rebound. So pretty strong swing low support that had taken place right at the end of September of 2024. So that's how the first support has been identified. Right, now let's move on over to the commodities, right? We've covered dollar index, dollar yen. Let's move on over to the commodities, starting with gold. XAU USD is the ticker symbol for spot gold. And we can see that after making its latest intraday all-time high last Thursday, 3rd of April, right, it reached $3,167.72 per ounce. We saw gold prices reverse quite sharply, right, from peak to trough. Gold prices have fallen more than 6%. However, it looks to have stabilized today, right? It looks to have found support just above the pivot. The pivot at $2,954 is a pullback support level that's accompanied by a Fibonacci retracement at 38.2%. This retracement level was found starting from this swing low on the 14th of November of last year and ending with the swing high, of course, which is the intraday high on the 3rd of April. We can see that the 38.2% retracement sits just slightly below the pullback support at 2,954. So we can see here as gold prices dropped sharply as markets reopened today, right? It not only did it gap lower, it dropped all the way down, dropping very close to the pivot before reversing and rallying strongly to close the gap. And now it's currently hovering above the 3,000 mark as well, $3,000 mark. So it looks like gold could rebound higher, right? Could resume the uptrend as it continues to trade above the green Ichimoku cloud, which highlights the ongoing bullish momentum. And at the same time, I think we can identify a pretty decent upward channel as well. Right? I think it's a pretty decent upward channel that we can identify over here. There we go. Right, we can see that spot gold prices has bounced off the lower trend line of the upward channel several times, right? In mid-Jan and very clearly in the end of Feb, mid-March, and today as well, it looks to have just bounced off the lower trend line of the upward channel once again. And at the same time, the upper trend line of the upward channel has functioned as resistance, right? We can see here gold running to resistance on 11th of Feb, and then again on the 1st of April, and finally on the 3rd of April as well. So you can see gold continues to respect this upward channel, highlighting the ongoing bullish momentum, right? And the pivot looks to have been identified rightly as a pullback support level where gold looks to have stabilized earlier today, and it could resume the uptrend as the day progresses. Now, in terms of resistance, right, we can see, of course, a swing high resistance being formed here last week, and we've identified it at $3,132 per ounce, while the first support is an overlap level at $2,790, which is also accompanied by Fibonacci retracement at 61.8%. This level previously functioned as a significant swing high resistance back at the end of October 2024, functioning once more as resistance on 24th of Jan this year, and then functioning as support in the first week of Feb. So this creates a pretty decent overlap level that we can use in the identification of the first support. And it's also accompanied by a Fibonacci retracement at 61.8%. So very strong upward momentum for gold prices, and looks to be resuming the uptrend after coming very close to the pivot early today, and it looks to have staged a very nice rebound. Right, now let's move on over to crude oil. XTI USD is the instrument that tracks crude oil futures, and we can see this commodity has tanked very sharply since the beginning of April. In April alone, right, we have seen crude WTI prices plunge well over 17%, and if you look at it since 15th of Jan, mid-Jan, it has dropped nearly 28%, a huge drop for crude prices. And you can see here this retracement to the upside from 10th of March till the 3rd of April was in fact a bear flag, right? This is actually a very nice bear flag that got taken out, right? That got taken out last Thursday, 3rd of April, right? as crude oil prices retrace higher, it ran into resistance at around just underneath the red Ichimoku cloud, and after that it just went into free fall. Right, so now this is going to be pretty challenging for crude prices here, WTI oil, right? If we zoom out, right, you can see there's no major support all the way till about this swing low here that had taken place in March of 2021. This is around $56 or $57 per barrel. So let's zoom in over to this area, and we can see here there's a pretty decent support level taking place in March of 2021. So this is where a potential support level could be, right? And we can see that after gapping lower today, right? Remember crude oil prices, or XTI USD at least, closed at $62.14 per barrel last Friday. It gapped significantly lower. This gap has not been filled yet, so perhaps we could see a retracement to the upside to fill the gap before this commodity reverses to drop lower. So perhaps there's going to be a potential retracement to the upside, and we could see this gap trying to be closed, and I can spot a pretty decent pullback resistance level at around $61.68 per barrel. So that's how the pivot has been identified as a pullback resistance level. Previously, this level functioned as a multi-swing low support, first on 21st of May 2021, and then again on 24th of August 2021. And then, of course, when price breaks lower, what was previously a multi-swing low support could potentially function as a pullback resistance. So that's how the pivot has been identified. And of course, the first support is this multi-swing low that had taken place on 23rd of March 2021 and the 6th of April. So that's how the first support has been identified. Now coming back to where XTI USD is trading, right? So we could potentially see XTI USD try and close the gap, right? Remember, there's a big gap here that has yet to be filled. So we could potentially see this gap being filled. So we could see a retracement to the upside, which is where the pivot has been identified. And this is where we could see WTI oil once again stall and reverse to resume the downtrend. Now, beyond the pivot, which is the pullback resistance, there's another pullback resistance that I would like to highlight, and that level comes in at around $65.70. Right, looking all the way back till December 2021, we can see that this level at $66.20 previously functioned as a very significant multi-swing low support, with XTI USD bouncing off this level several times. But of course, now with price breaking underneath it, this what was previously a significant multi-swing low support could function as a potential pullback resistance. So that's how the first resistance has been identified. And now we can also run a Fibonacci retracement from this swing high on Wednesday, 2nd of April, going down to the low of today. Let's take a look at all the fibs. We can see that the 23.6% retracement accompanies the pivot very well, and we can see the 61.8% retracement sitting just above the first resistance. So let's keep these two retracement levels on. And perhaps there's a Fibonacci projection that we can use as well, right? I see a nice zigzag pattern here being identified, so perhaps we can run a projection here as well. Let's try it out. Projection tool involves 3 points, so starting point 1, 15th of Jan, down to point 2, 5th of March, and ending at point 3, which is the 2nd of April. So let's take a look at all the fibs. And we can see that 61.8% has already been surpassed. 78.6% projection is where crude prices look to have found a floor, temporary floor, and 100% projection sits just underneath, not just underneath, but sits close, just below the first support at $57.32. So let's keep the 100%, let's keep the 78.6% and 100% projections in the analysis. And I would like to highlight the 78.6% Fibonacci projection, right, as a downside confirmation level. As a take note, we could see, first of all, we could see crude prices retrace higher to fill the gap, running into a pullback resistance accompanied by Fibonacci retracement at 23.6%. And from this point onwards, should we see a retracement here to fill the gap, we could see crude prices once again come under pressure and reverse to drop lower. And of course, if the projection 78.6% gives way, right? This is what I would like to identify or label as a downside confirmation level, and that would trigger further downside move or uh, for the sell-off for XTI USD towards the first support at $57.30. So take note, crude prices have come under immense selling pressures over the last couple of weeks. There could be a potential retracement to the upside, right? As I mentioned, there's a pretty big gap here, right? With XTI USD closing at around $62 per barrel last Friday. It opened at $59.70. It attempted to close the gap early today. So far, it has not done it, but perhaps it could play out over the next 12 to 24 hours. So let's see how this goes. However, overhead pressures continue to remain in place for this commodity, and we can expect further downside, or we can expect the downfall to extend further. Right, so these are the key levels here for XTI USD, which is the instrument that tracks the WTI crude oil futures. All right, we've covered commodities as well. Now let's move on over to the indices. Let's start with the DAX. The 40 is the instrument that tracks the DAX futures. Right, and we can see now that the DAX has gapped down lower very significantly. Right, it's a huge gap down. Right, it closed at 20,300 last Friday, and it gapped down as much as 3.5%. It looked to fill the gap, right? It retraced higher as trading got underway this week on Monday today, 7th of April. However, this gap has yet to be filled for now. So perhaps we could see a potential reversal as well, right? Or a potential retracement to the upside to fill the gap before we see the retracement, or before we see the downward extension continue to fall. So perhaps we can see, I would like to identify a pretty decent pullback resistance level close to the gap here at 20,427, which we can identify as a pivot, right? So maybe we could see DAX retrace higher to fill the gap before finally resuming the downtrend once again. Nevertheless, even if this gap does not get filled, remember, we are seeing global equity markets come under intense selling pressures, right? So take note, we are in a total risk off environment, right? Risk off environment means where equities are sold off aggressively, while safe haven assets such as US Treasury bonds, the Swiss franc, the Japanese yen, see strong bids. However, gold is also a safe haven asset. However, this time round, it wasn't functioning as a strong as a safe haven asset over the last couple of days, especially on Thursday and Friday. However, today demand for gold looks to be returning, so perhaps now investors are flocking to this safe haven asset once again. Now coming back to the DAX, the 40 right potential pivot at 20,427 is a pullback resistance level. Right, remember any retracement to fill the gap could be met with could run out of steam here for the DAX close to the pivot. Now beyond that, there was a previous multi-swing low support that had taken place on 27th of Jan and 3rd of Feb. Right, this was previously a multi-swing low support level, but once that got taken out last Friday, a pullback a multi-swing low support now can be a potential resistance. In this case, this is a potential pullback resistance, which we are identifying as the first resistance. Now we're going to run a Fibonacci retracement starting from the intraday all-time high for the DAX, which was formed on 18th of March, going down to the swing low of today. Let's take a look at all the fibs. We can see that, okay, 38.2% sits relatively close to the pivot and 50% just underneath it as well. So let's keep these two retracements on our charts and highlight these areas as resistance zones. Right now, in terms of support, right, we can see that there is a pretty decent overlap level here. Zoom out a bit, right? Yeah, there's a pretty decent overlap level at 18,894, which is where the DAX seems to have bounced off very nicely earlier today. Right, so first support is a very significant overlap level, and it sits at 18,894. Now, on this uptrend here that begins from 5th of August last year, we can also run a Fibonacci retracement from the swing low to the swing high or the intraday all-time high on 18th of March. Let's take a look at all the fibs. Right, we can see here, right, the DAX has crashed through all the retracements from 23.6 all the way down to 61.8%, and 78.6% sits simply too far from where the first support has been identified. So that's fine, right? Don't force the Fibonacci retracement into the analysis if it doesn't align close enough to a predefined support or resistance level. Right, so once again, we're seeing significant risk of mode or risk of environment for financial markets. So that means global equities are selling off aggressively, while safe haven assets such as the Swiss franc, Japanese yen, and gold and US Treasury bonds are seeing very strong demand. All right, now let's see if there's anything else we can do for the DAX. No, okay, DAX looks to be sliding lower as well, right? It looks to be sliding uh, lower today. It was a very wild session so far. If you look at it on the 4-hour time, or let's look at it on the 1-hour time frame, right? You can see uh, the DAX gap lower, retraced higher, attempting to fill that gap, but it failed, and then dropped all the way down towards 18,894, and now looks to be floating or hovering around 19,500. It could make another attempt to fill this gap once more, and then we could see it come under pressure and probably reverse to resume the downtrend. Alright, so this is for the DAX. Let's move on over to US 500. Right, US 500 is the instrument that tracks the S&P 500 futures, and we are seeing a very similar market structure as well, right? A big gap to the downside, retracing a little bit higher, attempting to fill the gap but failed. However, now it looks to be making a second attempt to try and fill this gap once more. Now coming back to the daily, so we can see a potential retracement to the upside here with a potential pullback resistance identified at around the pivot of 5,117, right? It's a nice swing low support that had taken place here back in August of last year. And of course, when price broke underneath this level, what was previously a swing low support could potentially function as a pullback resistance, which is how the pivot has been identified. Now higher up, it's another nice swing low that had taken place in September of 2024. And once again, once this level was taken out last Thursday and Friday, a previous swing low support could now potentially be another pullback resistance as well. And that's how we've identified the first resistance. Now we can run a couple of Fibonacci retracements here on this downtrend. The first one starting from this swing high on the 26th of March, going down to the low of today. We can see that the 38 and 61.8% retracements accompany the pivot and first resistance very well. So of course we're going to keep these two levels on. Then we're going to run a second retracement starting from the intraday all-time high on 19th of Feb, all the way down to today's low. Let's take a look at the fibs once again. I believe there's a 50%. Oh, no, actually no. That's fine, right? Once again, this second retracement doesn't really align well with the pivot and first resistance, so that's fine. Let's not force the Fibonacci retracement into the analysis if you really have to force it on. Okay, so that's pivot and resistance. Both are pullback resistance levels, accompanied by the 38 and 61.8% retracement respectively. Now in terms of support, right, we can see right, we're coming down to the 4,000 level, right? We can already see US 500 breaking under the 5,000 handle earlier today, right? And the next support, major support could be, let's see this. Okay, I can sort of spot a pretty decent pullback level here. Previously, this was a multi-swing high resistance. Firstly, on 27th of December 2023, then resistance once more on 12th of Jan 2024, and it looks to be an area where US 500 has found the floor earlier today. So it looks to be a pretty decent level that we can identify as the first support at 4,786. Right, that's a nice uptrend that begins from October 2023. So let's run a Fibonacci retracement from this swing low, going up to the intraday all-time high, which was on 19th of Feb. We can see that US 500 has smashed through all the retracement levels from 23.6% all the way down to 61.8%. And of course, we can see 78.6% is simply sitting too far from the first support. So that's fine. Once again, don't force the Fibonacci retracements onto the analysis if it doesn't align well with a predefined support or resistance level. Right, so these are the key levels here for US 500. Right, it's a big gap, just like most equity futures uh, instruments this week, right? I think we could see this gap start to be close at some point uh, this week, so maybe over the next couple of days, perhaps, right? We are seeing very sharp sell-off take place, and we could see a potential retracement to the upside, right? Maybe something similar to what we saw between mid to and March, right? It's a nice bear flag here, right? This was a pretty decent bear flag as well. Right, nice bear flag that had taken place in the second half of March. Perhaps something that we could see play out this week as markets try to close their respective gaps here. Similarly for the 40, alright, there's no bear flag in the 40 so far. It's been pretty much free fall here, but we can finally see this instrument turn into green for the day. Probably the first time for the day it's turned into the green on the daily candle here, I suppose. Then okay, yeah, and oh sorry, it won't be the first time, right? It's probably like the second time today. It's turned into green, and for US 500, very significant bear flag that got taken out at the end of March. Perhaps we could see something like that play out this week as well. Right, let's quickly take a look at US Tech. Right, US Tech is the instrument that tracks the Nasdaq futures, right? Nasdaq futures as well. Let's see how did this play out, right? I think interestingly there wasn't much of there doesn't seem to be much of a gap here. Yep, okay, interestingly for US tech, at least for this instrument, there doesn't seem to be any noticeable gap, right? As markets reopen today, right? It looks pretty much intact. Quite interesting to see that. Okay, nevertheless, let's see where we could identify potential uh, resistances as well. Right, we can see here after dropping lower and looking at the 1 hour time frame, right? US tech looks to be retracing higher, and it could run into resistance. And what I see is a pretty decent overlap level at around 17,800. Right, you can see here this level previously functioning as support in mid March, and then over here as well in early April, then functioning as resistance right at the end of April, and a swing low support in the first week of August. So pretty decent overlap level that we can identify as a pivot at 17,812. Right, and we could see any retracement to the upside fizzling out at around the pivot. Now higher up at 18,303. Previously, this level was a very significant trough that was formed, very significant swing low on 10th of September. And of course, when price breaks underneath it, what was previously a swing low support could now potentially function as a pullback resistance. Right, now that we've identified the pivot and resistance, we're going to run a Fibonacci retracement as well. We're going to run a couple of Fibonacci retracements. The first, starting from this swing high on 26th of March, going down to the low of the day. We can see now that 38 and 50% retracements accompany the pivot and first resistance very well. And we're going to try to run the second retracement, starting from this swing high here on 18th of Feb down to the low of the day. Once again, let's take a look at all the fibs. In this case here, okay, we can see 23.6% sit pretty close to the pivot. That's fine, let's keep that on, but the rest are sitting way too far from the first resistance, of course. So let's keep 23.6% here. And we have a Fibonacci confluence at around the pivot. Now that simply means you have more than one Fibonacci level at a particular price zone, and typically that adds further strength or further potential strength to this resistance barrier here. Right, and in terms of support, you have to zoom out all the way to the prior swing high resistance that was formed right at the end of 2021 back in November and December of 2021, right? A nice top multi double top here being formed, right? Very nice double top here being formed. This was previously a significant multi-swing high resistance, and of course with price breaking higher at the end of December and early end of December 2023 and early Jan 2024. This looks to be a pretty decent overlap level, which we can use as, oh, actually no, I would like to use this overlap here, right? Pretty decent overlap here. We see a little bit of resistance in November of 2023. We see a swing low being formed here on 8th of Jan 2024. And it looks like today, right, earlier today, where US Tech sort of stabilized and reversed sharply off this level here. So first support is an overlap level at 16,166. Right. Okay, so interestingly, there's no major gap on the US Tech, but we are seeing huge gaps on US 500 and the DAX as well. And looking at the 1 hour time frames, right, the DAX and the US 500 look to be retracing higher, looking to attempt to make a second attempt to fill this gap, and that could happen perhaps at some point later today or maybe by tomorrow. However, overhead pressures continue to remain in place for equity markets, but that does not discount any counter trend rallies, right? Especially here, like you see here from in the second week of March, a very strong counter trend rally. This is a very clear bear flag in hindsight, and we saw US 500 nosedive after that. So perhaps we're going to see another formation of a potential bear flag once more. Right, the bear flag is simply going to be a counter trend rally to the upside. All right, okay, with that, let's move on over to Bitcoin. Let's take a look at Bitcoin. And earlier today, right, we had identified the pivot at 79,600 as a potential support level, right? This was previously a pretty decent support level for Bitcoin since the beginning of March. However, this level looks to have given way quite easily today, and Bitcoin is falling towards the $73,240 level. This is a significant pullback. Support that's accompanied by a Fibonacci retracement at 61.8% and a Fibonacci extension at 137%. Before we get to the Fibonacci levels, we can see that previously 73,240 served as a very significant multi-swing high resistance. Firstly, on mid-March 2024, and in early April. We can even argue here that in May and June as well, this level functioned as resistance, then very clearly functioning as resistance right at the end of October, before making a bullish breakout on 6th of November. Right, so what was previously a very significant multi-swing high resistance could now be a potential pullback support level that's accompanied by a Fibonacci retracement at 61.8% and accompanied by a Fibonacci extension at 137%. Now the retracement was found starting from this swing low on 5th of August 2024, going up to the intraday all-time high that was formed on 20th of Jan. And of course, the extension at 137% was found by running a retracement from this swing low on 11th of March, going up to the swing high here on the 24th of March. And we can see the extension at 137% sit very well with the first support. It's pretty much exactly at the first support. Okay, higher up, there's a nice resistance barrier at 88,147, right? We can see Bitcoin as it was retracing higher to the upside at the end of March, stalling at around just under $88,000, not once but twice, and it has dropped significantly lower. And this level here, right? Okay, oops, this retracement needs to end here, and we can see that the 38.2% retracement sits pretty well with the first resistance. Now, we started the retracement from the swing high, the intraday all-time high on 20th of Jan, ending with the low of the day. Right, and we can see 38.2% sit pretty well with the swing high resistance at 88,147. So Bitcoin, we can see that it's clearly trading in a downward channel, right? A series of lower highs, lower lows, and at the same time, trading underneath the red Ichimoku cloud which highlights the ongoing bearish momentum as well. So in fact, we can probably draw a very nice downward channel as well. And yeah, we've got a pretty decent downward channel where we can see Bitcoin is running through resistance several times in the upper trend line of the downward channel while finding support a couple of times as well. So this downward channel continues to remain respected. And of course, we can see overhead pressures building and any retracement to the upside uh, towards the pivot at around 79,600. This is where Bitcoin could once again stall and reverse to drop lower. And you can see here on the 1 hour candle, it looks to be retracing higher once more. Perhaps the pivot is where it's going to stall once again and reverse to drop lower. Okay, there's one more retracement that I can run as well. By starting from this swing high on 24th of March, going down to the low of today. Let's take a look at all the fibs. We can see that the 38.2% retracement aligns very well with the pivot. Right, there we go. So pretty decent retracement level to accompany the pivot, which is a pullback resistance here. All right, so these are the key levels for Bitcoin as well, right? When it seemed to have found the floor at around 80,000 since mid-March. However, this level has now given way, and of course, this is going to uh, create further headwinds for this coin here. Right, okay, as we come towards the end of today's live analysis session, right? Are there any requests? Right? Do you have any requests for any other instruments? Right? We've covered the dollar index, dollar yen. If they had a look at the commodities such as gold and crude oil, we covered the indices ranging from the DAX to US S&P 500 to Nasdaq as well, and we've just covered Bitcoin too. So if you guys got anything else, right, just drop the request in the chat box, and I'll be more than happy to go through the analysis with you. Otherwise, in the meantime, I'm just going to launch a poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar, and then continue the session with a couple more analysis. Right, okay. So let's see. All right, then just coming back to the calendar for this week. Right, today, right, is pretty much there's nothing really important to take note of today, Monday, 7th of April. However, on Wednesday, we've got the RBNZ. This central bank is widely expected to make a 25 basis point reduction in its official cash rate to bring it down to 3.5%. But given the current uh, concerns surrounding a global trade war, I wouldn't be surprised if the RBNZ actually moves ahead with a larger rate cut on Wednesday, perhaps maybe on a 50 basis point reduction, given the current environment of mounting uh, pressures for a global trade war. And then on later on that day, same date, 9th of April at 6 p.m. GMT, the Fed will release its meeting minutes from the FOMC meeting that took place in March. Usually, the release of these minutes can have a pretty decent impact on markets. However, most of the macroeconomic data over the last couple of weeks has been overshadowed by tariff headlines. So please take note of that as well. Perhaps there won't be anything meaningful that we can see from the release of the minutes this time round. However, we've got inflation data out of the US on Thursday, 10th of April. Consumer inflation data is going to be released at 12:30 p.m. GMT time, and we're expected to see inflationary pressures moderate slightly lower for the month of March. We're expecting it to see reduce from 2.8% in Feb down to 2.6% in March. And if we see um, inflationary pressures continue to dissipate lower, this could add further downward pressure on the dollar. However, and also on Friday, sorry, 11th of April at the same time, 12:30 p.m. GMT, producer price index is going to be released at 12:30 p.m. At the same time as well. And should we see price pressures for the wholesale sector continue to moderate lower, this could once again be a second catalyst that would increase the downward pressure on the dollar as well. Right. So coming back to the charts on TradingView, right? If there's no further request, then let's just do a quick recap of what we've covered, right? Dollar index trading in a very strong downtrend. Clearly see a series of lower highs, lower lows, and of course it continues to trade underneath the red Ichimoku cloud as well, right? Any retracement to the upside, which is where the pivot sits. The pivot is an overlap resistance. That's accompanied by Fibonacci retracement at 33.6%. This is where we can expect dollar index to probably stall once again and reverse to resume the downtrend. Similarly for dollar yen looks to have stabilized at around 145.50, looks to be retracing higher. However, it is approaching an overlap resistance, which is the pivot, and it's also accompanied by a Fibonacci retracement at 38.2%. So perhaps we could see the dollar yen stall at this level once more. Should we see it hit this area and then reverse to continue the downtrend, right? We can clearly see a very obvious downward channel for this currency pair as well. Gold looks to have stabilized today, right? XAU USD is the instrument for spot gold, and we see after what was a very sharp pullback, right? This pullback from peak to trough was as much as or was well over 6%. However, gold price demand for gold looks to have picked up earlier today, with spot prices stabilizing just above the pivot at $2,954. Pivot is a pullback support level that's accompanied by a Fibonacci retracement at 38.2%. Right, and we could see a resumption of the uptrend as this upward channel continues to remain respected, right? Of course, we see this wick here, today's wick, dipping slightly below the upward channel, but nevertheless, we can see that the upward momentum seems to be intact. Looking at XTI USD, this is the instrument that tracks the WTI crude oil futures, and we can see that this commodity has come under intense selling pressures, right? Especially since the beginning of April. However, today, after gapping significantly lower, crude prices look to be retracing higher in an attempt to fill this gap here. So perhaps we could see a nice retracement to the upside, and should XTI USD hit the pivot at around $61.70, this is probably where it's going to stall once again and reverse the drop lower. And if it can break through the Fibonacci projection at 78.6%, that's probably going to invite further sellers for this commodity. That's why the projection level has been identified as a downside confirmation level, with the first major support being identified at $57.30 per barrel. This is a very significant swing low support that was formed on March of 2021, and it's also an area that's accompanied by a Fibonacci projection at 100%. Alright, and then let's quickly wrap things up with the DAX. Right, the DAX has made a huge gap, looks to be retracing higher today in an attempt to fill that gap here. Right, however, we could see any retracement to the upside met with strong resistance at the pivot level, which is a pullback resistance at 20,427, which is also accompanied by Fibonacci retracement at 38.2%. Similarly, US 500 is a strong gap, a large gap here as well, and it has flipped into green. The daily candle has flipped into green, and we could potentially see this gap being filled out perhaps at some point today or maybe by tomorrow. And I see a nice pivot at 5,117, right? This is a strong pullback resistance level that's accompanied by Fibonacci retracement at 38.2%. And in terms of support, right, after dropping as low as 4,799, US 500 looks to have stabilized slightly above for the first support here, and looks to be looking to close the gap. Right, it's looking to fill the gap today as we speak, or at some point today, or maybe by tomorrow. Right, and of course Bitcoin as well, right, has broken through the $80,000 mark convincingly today, and that's going to invite a lot of additional sellers. And we can see that this coin continues to trade within the downward channel and trade underneath the red Ichimoku cloud, confirming the ongoing bearish momentum and bias for this coin here. Alright, that's all I've got for you guys today, right? Thanks everyone for tuning in to today's live analysis session brought to you by IC Markets. Do look out for all upcoming webinars for the remainder of this week. Got a combination of live analysis and educational topics in English, Thai, and Bahasa. Alright, so take care everyone, have a great trading week, and do look out for all those tariff headlines, because they're definitely going to inject much higher volatility throughout the week as well. Right, take care everyone, and catch you all in the next session.